Your MACD crossover signal is broken, at least in the markets where most traders need it most. In strong directional trends, the indicator that's supposed to call momentum shifts produces whipsaw after whipsaw, stopping you out on every counter-trend bar. Today, why MACD behaves this way, the single Confluence filter that fixes it, and how the pros use MACD as part of a stack instead of a standalone signal. Here's the structural problem. MACD is the difference between a fast and slow EMA, and the signal line is a smooth version. In a strong trend, every minor pullback temporarily shrinks that difference enough to trigger a cross, even though the underlying direction hasn't changed. MACD measures momentum change, not direction. Without a directional filter, you take every counter-trend cross as if it were a new signal. That's why your backtests look perfect on flat ranges and your live trades bleed in trending markets. Watch this in a synthetic uptrend. MACD fires bear crossovers 4 separate times. Each one looks like a textbook short. Each one would have stopped you out within 2 sessions because the trend hadn't actually reversed. The signal was firing on noise inside an intact uptrend. If you trade these crosses naked, you give back your previous trend-following winners chasing reversals that aren't there. Here's the fix in one rule. Only take MACD crosses that agree with the higher time frame direction, and the cheapest direction proxy is our SI at 50. Our SI above 50 means we're in bullish momentum. Take long MACD crosses, ignore shorts. Our SI below 50 means bearish momentum. Take short crosses, ignore longs. That single filter eliminates most of the whipsaw losses without removing any of the real trend-confirming crosses. Same chart, our SI overlaid instead. Our SI sits above 50 the entire move. The 4 bear MACD crosses fail the filter. Our SI above 50 means we ignore short signals. The only signals that survive are the bull crosses that align with momentum. You took fewer trades and every one of them was with the trend. That's Confluence applied, multiple independent confirmations agreeing before you commit a cent. On a real chart, the rule is the same. Scroll back any liquid stock and you'll find dozens of MACD crosses, many fired against the trend. Apply the RSI 50 filter and you cut the signals by 60 to 70%, but the ones that remain track the meaningful turns. Stop trading MACD as a standalone trigger. Start trading it as a Confluence component, and the same indicator that frustrated you starts working. So MACD measures momentum change, not direction. In strong trends, it whipsaws on every pullback. Filter with RSI 50 and only take crosses in the dominant direction. You'll take fewer trades, but the ones that fire will actually hold. The pattern repeats across every oscillator. Single indicator signals are noise. Confluence is signal. Subscribe for the full method and trade your own plan. Education, not financial advice.